Thank you very much.
Thanks.
Dow now down 400 points, getting back to the lows of the day with this crazy sell-off. Everybody's trying to figure out if this could be the start of a bear market or a correction. Noted short seller Jim Chanos was on the halftime report earlier today on CNBC. Here's what he said about that.
Markets go up, markets go down. I mean, I have no idea where we are if this is even a correction. I mean, I think we've gotten a little complacent that it's been pretty much straight up for the last few years. That's not how markets work. But as to whether this is the start of a bear market, I have no idea, or a correction.
Well, at last check, we'll see if we close here. I believe the Dow is now down something like 9.5% from its recent highs. So 10% is all it takes for a correction. Yep. Let's talk about it with our closing bell exchange. Ken Mahoney from Mahoney Asset Management joins us now, along with John Brady from R.J. O'Brien and Ben Willis from Princeton Securities. Gentlemen, welcome to all three of you. Ken, let me just start with you. What do you do in this environment? How much has this caught you off guard?
I mean, a little bit. We started lowering our risk, so to speak, down the food chain, try to find lower beta, go from growth to value, look at more dividends. I mean, this week really reminds me of that movie with Bill Murray, Groundhog Day, right? I mean, every day he wakes up to the same type of thing. I mean, investors every morning
400-point decline, Ken? That's Groundhog Day? Because this seems pretty uncommon, actually.
Yeah, no, meaning like every day we wake up, the Shanghai down 6%, and then followed by European markets 3%, and then we get the hot potato with the Dow down 150 points, 160 points. We had to deal with this all week, and it just seems like a never-ending cycle. But guess what? It will end at some point. We're encouraging investors to take a deep breath. Over the weekend, take a look at some value type of stocks or ETFs that pay dividends, because the Fed now raising rates maybe September or later this year.
Right.
It is going to be a little bit different. You're going to see some contraction in multiples. We're seeing that happening now. So, but at the end of the day, I think we're going to see a market goes more for growth, towards value, and more towards dividends, and that's where we want to be. And we want to sharpen the pencils over the weekend, take a deep breath, and look at this.
Ben Willis, as I mentioned earlier, this is expiration day, so that's going to add fuel to whatever fire we got going right now. Read the mind of the market for us. What's on everybody's mind as we go through these last 50 minutes of trading here?
Where is the bottom? None of the technicals have held. The idea of the 2040 of buying the dip had been so successful for such a long period of time, where you bought that dip and then sold the rip on the way back up. Yesterday, when we broke 2040 and didn't hold, you saw a great many of those trades just unwind into the close to get out of them. Right now, it's like swimming in the deep end. You're continually trying to find if there's a bottom to touch at this point. So for the expiration, right now, our volume average is about 70% higher than traditional volume, but that is because of the expiration. What you're witnessing right now on the individual stocks is what's called pinning. So the stocks are being pinned to where their closest strike price on their option contract. So a stock that's at 70 and a dime is going to pin down to 70 rather than go higher.
And we're seeing the market at the lows of the day down 435 points on the Dow. That's a 2.5% decline on top of yesterday's 2% decline. So we've given up nearly 5% in 2 trading sessions in this market. John O'Brady, is the market pushing crude lower, or is crude continuing to fall, pushing the market lower?
Well, I think crude is certainly the canary in the coal mine, and the dip below $40 is usually pretty good for the consumer. But because of refinery issues, both in the Midwest and now the East Coast, the savings that consumers would normally get at the pump won't be going into consumer discretionary products, and certainly not consumer discretionary stocks. But you may want to look at consumer discretionary stocks as we go into the fourth quarter and the strong Christmas season. I would also argue to this too, Kelly. I think the market short term is pretty oversold here. A lot of these technicals are screaming oversold levels, and we're going into a weekend where the People's Bank of China has traditionally sort of made announcements early on Sunday mornings. And so you could see kind of a large short base here that could get caught offside if the PBOC comes into the market on Sunday and cuts rates. And so we would caution late sellers during the afternoon Friday not to do that. There is event weekend risk here, and the PBOC could cut rates that could lead to a sharp corrective rally on Monday.
Ben, where's this money going? I mean, do you see it going to bonds? I mean, gold we see is higher. I don't know if that's a coincident indicator or what, but what do you think?
The positions that are being liquidated, it appears the money is going to the sidelines. We saw some very interesting flow in the middle of the day where the Russell, after hitting corrective territory, started to rally and almost went into plus territory. So that tells us once again that the broad market, in the sense of the stock market, you're still selling the developing markets, the international international markets, the exposure to China, which explains Apple. But in the United States, if you want to continue to have exposure to the growth, I believe the United States will lead us out. You're seeing money flow into the Russell 2000. It was in corrective territory because of the correction in the energy sector and in the biotechs. I believe there's parts, we're in a sector correction, if you will. It's happened in energy already. It's happened in the biotechs. So it's the market, there are parts of the market that have corrected. That long correction that we've been waiting for as traders for over 3 years, we're getting part of it, not just the broad market. So we're at a place where you want to be buying stocks, not stock markets.
Just so everybody's aware as well, the Dow here is having its worst week, down about 4.5% in 4 years. 16,516 is the level for a 10% correction. We're only about 40 points higher than a 10% correction in the Dow, which we have not witnessed in about 4 years, Ken Mahoney. This one came swift and it's come sharp. Does it matter if we're down, if we hit 10%? How significant are these levels, Ken?
I mean, again, look, technicians are going to watch this very closely. Really, the genesis, though, of this sell-off, I believe, started last week with China overnight devaluing the currency. It just shows very quickly how things can change. You know, we bounced a little bit last week. You know, now China's trying to, try to work through their problems, and they're trying to, make sure their exports are cheaper, but they're also exporting fear in the marketplace because of their unpredictability. And that's what we're seeing right now. But I think the genesis of the sell-off started last week. And these technical levels, yeah, everybody's watching them. It's very important. But at the end of the day, we're going to bounce. We're going to bounce, not because of some technicians.
John, anything you'd buy here? Any opportunities you see?
Well, the opportunities we see, Bill, actually are in the rates markets. You know, given global equity market volatility, the bond market has not traded all that well this week, and especially the long end of the Treasury curve, which when I last looked a few moments ago was actually down on the day. Normally with such increased volatility in risk markets, the bond market would be strong. So there's some adjustment trades going on there. There's some central bank selling going on of long-dated U.S. Treasuries, and I think some far Eastern Asian central banks are raising capital, selling U.S. Treasuries, bringing some capital home. And again, I think if the Bank of China eases rates, you're going to see this thing reverse rather rapidly and violently.
Something to watch for on Monday.
We should just know, I know we have to leave it there. The last time the PBOC this summer jumped in to do that, to cut reserve rates, it didn't get the relief rebound it was hoping for. Perhaps conditions this time are different, but no doubt a lot of risk going into this weekend. Gentlemen, thank you all for joining us here. 45 minutes to go in the session. The Dow is down 4.